All right. Hello, everyone. This is Mike Ivancy. Glad you could join us today in these scary times, but thank you all so much for joining us. We're excited to present today. It's not going to be just me. We have a few other folks joining as well. I'm going to give you a brief overview of what we're going to talk about today and the presenters, and then we're going to kind of dive right in, okay? Thank you all for joining us today again. So who am I? My name's Mike Ivancy. I work for C-Note. We are a impact investing firm really focused on financial inclusion, and we work specifically with CDFIs, and our goal is really to help close the wealth gap in America by smart community investment through CDFIs. You'll also be hearing from Crystal Langholz. She's the COO at First Nations Owesta Corporation. They've been in existence, I think, for almost 20 years or 20 years. They provide opportunities for Native people to develop assets and create wealth. They really are a leading organization in this field of Native and Indigenous communities and supporting and strengthening the sovereignty of these communities. And then, unfortunately, I think our next presenter has actually fell ill. Her name is Angie, and she's from NACDC Financial Services, which is an Indigenous or Native-focused CDFI. I think Crystal is going to try and share some of Angie's slides, but obviously there are a lot of health concerns happening right now, and unfortunately, Angie is ill, and so we send her our best. Angie's email will be available at the end of this presentation, so if you want to get a hold of her, you're welcome to do so. Obviously, we all send her our best. The slides I'm sharing now, you all should be able to view and actually download as well. If you have trouble with that, feel free to reach out to me at the conclusion of this webinar, and I'll make sure you get the slides. Also, I just want to let you know that you have the opportunity to ask questions throughout the webinar, and then at the end of this webinar, we have reserved time to answer any questions you all might have about investing in Indigenous communities, CDFIs, the work that myself or Lynne or Crystal are doing. And then the final presenter today is Lynne. She's from Candide Group. She's the head of lending. She was previously at RSF Social Finance, and she's done a lot of great work and will tell you about Candide's work to invest in these communities and support them. So today we're really going to cover the unique challenges that these communities face and the CDFIs, how they serve them, and those challenges they face as well. I'm going to give you a brief overview of the CDFI industry and their work generally, and then I'll lay the groundwork for some of the challenges these communities are facing. And then you'll get a lot more detail from Crystal, and Lynne will close us out. So you'll see kind of the examples of some of the projects, and I think those are primarily in Angie's slides, some of the discrete projects that these CDFIs fund, you know, whether it's a credit creation program, small business lending, things like that. You'll see how these can be really transformative, locally focused programs. So let's set the stage a little bit about the challenges that these communities face. So there's a significant income gap in these communities, and there is a significant issue with food deserts and lack of access to healthy food options. Further, the poverty rate is just significantly higher in a lot of these communities. And that's why we believe at C-Note especially that CDFIs are well positioned to address this. They're very locally focused, and they understand the needs within these communities, and they can work to address them proactively and build a more sustainable economic ecosystem for these communities. So a lot of you are probably familiar with CDFIs, but this is a quote from the Opportunity Finance Network, which is a leading consortium of CDFIs in the country. Essentially, CDFIs are private, typically nonprofit institutions. They're federally certified, and they are aligned behind the mission of supporting local communities. I like to say CDFIs are the phoenix that rose from the ashes of redlining, in the sense that they're typically community-founded organizations, and they're really focused on empowering the people in the communities that they serve, providing them economic opportunity to generate wealth for themselves and their communities. So since 2000, the number of native CDFIs has gone from 2 to 70, which is a clear indicator to me that CDFIs are very much aligned behind solving some of the challenges and addressing some of the challenges that these communities face. And the CDFI industry overall has undergone significant growth. There's over 1,000 CDFIs today, and much more than 140 billion in assets among these CDFIs. So what do CDFIs do? Typically, they serve a specific geographic community. They provide financial resources for, some examples include small business lending. Another example of that would be consumer credit programs where they make small loans to help people build their credit score. And they create jobs. And I say one thing that CDFIs don't get enough credit for, but I think is really significant and really important, is their work around technical assistance. And so in some instances, an example of that would be helping a small business, write their business plan or balance their books or do financial planning, helping them prepare to get a loan from a larger financial institution and kind of graduate up the business lending process. But it can also be providing technical assistance to communities, say a mobile home community that wants to organize to become a resident-owned community. CDFIs can provide assistance as far as how that's done. So there's tremendous work these CDFIs are doing beyond just lending. I think it's really worth recognizing that. So just one slide about C-Note. We're an impact investment firm. We're a female-led firm. Co-founders are Catherine and Yulia, amazing women. And our mission is really to help close the wealth gap in the United States. And so we're doing that primarily by funneling capital from investors into CDFIs. We also work with low-income designated credit unions, but our mission is just to get more capital in these communities that need it most. And so we made it possible so that whether you're an investor that just has $5, you can invest that through C-Note with CDFIs, but we also work with the foundations who are deploying, millions of dollars into these communities. And so I'm going to invite Crystal on stage because I'm about to wrap up my portion. But why are we talking about this today? It's important because more and more investors want to align their money with their values, and they're looking for opportunities to do so. And we've gotten questions about, hey, I want to support a certain geography, maybe Montana, or even more specifically, I want to support a geography in Montana and I want to support Native communities there. And I think there's a lot of energy and interest in supporting these Indigenous communities. And C-Note wanted to share that with you all about how there's opportunities to do so, help you understand the ecosystem more, and really give you the opportunity to empower yourself and share some knowledge from people that are doing this work and have been doing this work for years. So with that said, I'm going to pass it over to Crystal and I'm going to hop off stage.
Hi, everyone. My name is Crystal Angleton, and as mentioned, I'm the Chief Operating Officer of an organization called First Nations Owista Corporation. Owista is actually the Mohawk word for money or item of exchange, and we are about helping rebuild Indigenous economies, and so that's where our name comes from. I'm super excited to talk about the Native Community Development Financial Institution movement and the amazing work that are happening at our CDFIs all throughout the country. So just to give you some sense of who we are, as Mike said, we are 20 years old. I think we're 21 now. We celebrated our 20th anniversary last year. But we are a nonprofit intermediary organization. And so we are certified ourselves by the U.S. Department of Treasury as a CDFI. And it's our job. We take investment, larger scale investment, and then provide loan capital to our smaller community-based organizations that we're going to be talking a little bit about today. We also provide training, technical assistance, and capacity building to them. So for example, we would provide board training to help grow really strong community-based boards. We also help do strategic planning, help them think through financial self-sufficiency and all sorts of different kinds of strategies. So that's our work, and we love it. We have been doing it a long time. As mentioned, over 20 years of investing in our native CDFIs, and our native CDFIs are great investments. We have lent out a lot of capital during that time, and we have effectively written off $10,000 in 20 years. So our native CDFIs are great investments, and I'm really excited to just share a little bit about the great work that they do. So what is a native CDFI? And I thought Mike did a wonderful job kind of laying a framework of what kind of CDFIs do in general. Our native CDFIs, of course, are part of that broader CDFI movement. To become certified by the U.S. Treasury, you have to meet 7 criteria. Among those criteria are that you have to provide education and support services. And our native CDFIs, that is one area where we excel. Financial education programs, home buyer programs, financial coaching, small business education, really like very, very community-based work, building the capacity of local borrowers. And of course, all the amazing lending that they do, and they have to as part of our certification process, be community-based and accountable, which means our boards have to be representative of the communities that we serve. So just to give you some sense of the kinds of native CDFIs that are out there, the vast majority of CDFIs for us are loan funds, and they're largely nonprofit loan funds. There are, however, some really great native credit unions and native community-based banks, as well as one venture capital fund, but largely these nonprofit loan funds that are serving tribal, reservation, and statewide service areas focusing on Indigenous peoples. So just to give you some sense of history and context, what you're looking at is kind of a classic reservation map of the United States, but just to kind of contextualize as what has happened over time in the history of Western expansion. Native peoples in the U.S. were pushed further and further west, oftentimes off of their traditional homelands, into very rural economies, majoritively. Those land bases were oftentimes set aside as reservations. In some cases, those tribes were able to be located on their traditional homelands. In many cases, they weren't. Our executive director, Crystal Cornelius, who is dynamic and lovely, but when the rough translation of reservation in her traditional language is the leftovers, right? So oftentimes places that were very difficult to survive on, and land bases that were largely rural, or the places that farmers didn't particularly want. They weren't designed to be self-sufficient, sustainable places to live. But our native communities have done amazing work and thrived and survived despite a lot of these challenges. There are, of course, 2% of the U.S. population is Indigenous, ranging from Native Hawaiians to Native Alaskans, all the way through our Native American populations, all gathered throughout the U.S. So just to give you some sense of the native CDFI industry, the native CDFI industry is actually fairly old, in that the Lakota funds, which was the first native CDFI, was actually started in around 1982, and that actually was modeled after, and Muhammad Yunus came from the Grameen Bank and was partnership with some of those original starting efforts. And it was originally modeled after that model of lending circles and such on the Pine Ridge Reservation in central South Dakota, which is where I was an intern like 20 years ago. So I love that organization. But those kinds of community-based lending efforts grew progressively and were really strongly supported when the CDFI fund was created in 1994. That is, of course, the certifying entity that provides capital for our CDFIs. And in 2001, the Native American Lending Study was published. And what that did is it set a set-aside of those treasury funds for Native populations, because capital access in Native communities is incredibly challenging. As mentioned, you've got rural locations. The status of the federal lands can make things like collateralization in lending more challenging, not impossible, but more challenging and slower. All this had done to create basically capital deserts in Native communities, which, coupled with high poverty and unemployment, made the development of sustainable economies very challenging. And so the CDFI movement has really grown out of that as a community-based response to those kinds of capital concerns that were happening. And as mentioned, we are now up to 71 certified Native CDFIs with larger capital needs than ever. One thing that's happened, though, is that as our CDFIs have built the base of built the community base, done financial education classes, helped people integrate on their own terms into the capitalist economy, done all that development work, that is. They have created increased demand for capital in their communities, right? You've got communities that have built their credit and are now thinking we want to be homeowners. And so while our Native CDFIs have increasingly been able to access supply of capital too, diversifying their portfolios and accessing new sources, which is very exciting to see, they've also managed to grow their demand exponentially more quickly than they've been able to meet and grow the supply for capital. And so I'm super excited. We'll be hearing from Candide and the Wilhemina Fund around some of the work that they're doing in this space. We are really blessed to have a lot of partners that are helping us think creatively around this capital issue. And I'm really excited that so many of you are on this call and interested in learning more, because this is a challenge that we need to face as a country. So Native CDFI clients, just to give you some sense of the kinds of work that our CDFIs are doing, and I'm really excited. I'm super bummed you're not going to get to hear from Angie and that she's sick. She's wonderful. You'll get to kind of see through a case study of a CDFI that I will walk you through to the best of my abilities. But wanted to give you some sense of the kinds of work that and the clients that come through our Native CDFIs. So we talked a little bit. Native Americans on average have lower financial capabilities than other minority groups. They're least likely to be integrated into the banking system. And that's partially concerns and history associated. There's been, of course, history of racism associated with redlining, but also just a lack of access, right? You take Pine Ridge, which is the size of Connecticut, didn't have a depository institution located on it until the local CDFI created one about 5 years ago, right? So it's also just an access issue as far as being associated with the banking and the more traditional formal financial institutions. Also, least likely to have access to emergency funds or savings accounts. And so a lot of the work our Native CDFIs do is around some of this basic financial capability, providing financial education, even for youth, and really trying to build that borrower base over the long term by building the financial capabilities of their communities. They are serving target markets that kind of range in size and scope. There is a lot of local reservation-based Native CDFIs. Mike, of course, shared some of the higher poverty that's happening in Native communities. If you lined up a map of kind of the high poverty counties in the U.S. And and CDFIs and our reservations, you would see that one of the things that our CDFIs have oftentimes sprung up in higher poverty reservation economies, where they're trying to be that economic development engine in their communities. And over time, one of the things that's happened is some of them have expanded to serve statewide coverage. So you've got organizations like the Wisconsin Native Loan Fund that now serves the entire state of Wisconsin, serving Indigenous populations all throughout the state. So you see some of that kind of expansive regionalism starting to emerge in our CDFI industry as our groups, slowly over time want to expand to serve geographies just beyond most of the reservation environments that they were created to serve. So here they are on the map, kind of giving you a sense of where a lot of those CDFIs are. They span through all of the United States, but of course, as you saw the map earlier of our reservations, you can see that they're oftentimes, as would make sense, located in places where they're going to be serving higher populations of Native individuals. The loan products vary. So 78% of our Native CDFIs provide consumer lending, and that goes around that idea of I was telling you about building financial capabilities. Those would be consumer-based products like helping people build credit for the first time. Similarly percentage-wise provide small business or micro lending, trying to be economic development engines, helping develop entrepreneurship-based work. We see a lot. Before my time at Owista, I was executive director of a Native CDFI in the Crow Creek Reservation, and a lot of the kinds of entrepreneurs we were seeing were folks that were transitioning into the formal economy with their small business. So folks, for example, that had been fixing cars for a long time, or they had been making beautiful star quilts or traditional crafts, and were making that a business that was designed to support their families. And so a lot of that kind of smaller scale entrepreneurship and transitioning that into sustainable businesses, as well as home ownership. So 40% of our Native CDFIs want to start home ownership programs in the next year. There's a lot of interest in that space, and so there's these kind of wider range of loan products that all of our Native CDFIs are offering and excited to provide in their communities. Because we have some investors on the line, I thought it was really helpful to give you some sense of the strength of our Native CDFI finances. We are a lender to Native CDFIs, and so we have gotten to see that over the year and wanted to just share some of that data with you. So they have very healthy balance sheets. They tend to have difficulty accessing investor funds, and subsequently actually tend to be under leveraged, which is to say, they have really strong net asset ratios that tend to have really like long-term operating cash available, but smaller asset sizes in general than what you would see for in other kinds of CDFIs throughout the U.S. They tend to rely fairly heavily on federal sources of grant funds, but over time are becoming more and more diversified. And they are largely growing. Almost 80% had positive net incomes last year. Most of those were very positive as these organizations are growing and becoming more financially self-sufficient. The average earned revenue status, which is to say, without having any grants or any other kinds of sources come in, how much are their loan funds supporting the organizations, is just about 40%. And that's because they provide so many development services. They're providing so many classes and trainings and really doing a lot of that work. And so they are oftentimes relying on grants to subsidize some of that work. But you've got organizations like the Lakota Funds that are 45 years old. That is a sustainable institution right there. And so, we see kind of folks kind of falling in that general area. And I mean, I've put some numbers up here about, cost of capital and all that kind of fun stuff. But what I really want to say here is our native CDFIs are great lenders, right? You've got community-based organizations that are seeing their clients in the grocery stores. They have actually lower charge-off rates than the rest of the CDFI industry on average, and in fact, lower charge-off rates than many, many banks, and that's because of that community accountability and that place and that they occupy in as a community-based lender. There's also huge growth in loan volume, right? So the average is 22% every year. So these organizations are growing fast and rapidly and have and subsequently have a lot of capital needs in that space. And then we talked a little bit already, but loan products you find had over the next year, you can see a lot of interest in mortgage and housing as those capital products are needed more and more in Native communities. And so I'm lucky enough to get to just kind of talk briefly about the work of NACDC Financial Services. They actually have been partners of ours for a long time. They've been in our portfolio for quite a while. So I will do my best to represent the amazing work that they do. But they were founded in 2010 and made their first loan shortly after that. They are located in Browning, Montana. But they actually serve all of the reservations all throughout Montana. And how they do that is really interesting. They actually have loan committees, local-based loan committees in every single one of the reservation communities that they serve. And so they provide loan throughout all of those different counties and try to keep that focus very local. They provide so many loan products. I don't even know how they do it all, honestly, right? Because they're actually a fairly small team, but they provide consumer lending, so a lot of like credit building kinds of products, and tons of it's kind of a growth industry also in our native CDFI space. Many of them are in rural economies, but they provide a really strong ag loan program, and they teach a really cool class, the business of Indian ag. Where they're, providing support services to local farmers and ranchers. So a lot of ranchers out in Montana. They just opened up a new home product in the last year here, and are doing some amazing work around that. And I kid you not, they have a 0% default rate. And I actually lined this all up too. They have the most amazing her name is Patty, and she's their their office manager, and she does their collections, and she's actually she's a leader in the local church, and so she's like catching people in the pews like, hey, don't forget you're behind. So nobody wants to get caught by Patty in a basketball game, but so they actually managed to, despite all of this growth that they've seen over the last few years, have managed a 0% default rate. And we just wanted to give you a sense of the kinds of the many services they provide, because it's not just the lending that they do. The lending is a big part of it, of course, but because it's capital access, but they have some of the most amazing programs you've ever seen. They provide really significant business planning and technical assistance. They work with Native artists and do professional development and training. They actually, you can see it's Native Cash. They actually started in their as a kind of entrepreneurial activity of their own to help support their nonprofit work. It's a one-stop cash service, and what they were seeing in their community was a lot of people using really expensive check cashing services, and so they wanted to combat that, and so they actually opened up what's called Native Cash, and it's like a check cashing kind of service that they're hoping to eventually move into becoming a credit union someday. That's meant to provide some of those financial services in their community. They also do a mini bank program where they go into schools and it's actually just pretty amazing. But they have all of the local youth and the local schools all have they go through and they do a mini bank program where they all connect and get to manage their pretend bank accounts and get more comfortable learning about banking and checking services. So you can see, this is an example of one of their loan products, the Credit Builder loan program. It's usually helping people pay off high interest debts, and credit improves by an average of 140 points by the time the loan is repaid. So for example, the CDFI ran on the Crow Creek Reservation. We wanted to be a micro lender. We've started really excited about economic development in our community. And what happened was, we went to make our first small business loan. We were seeing people with really damaged credit histories, that they hadn't learned from their parents really how to manage their finances. And so we had to develop our consumer lines of business in order to support some of these other lines of business that we wanted to be doing around community development. And so but like many of our native CDFIs that have this program, financial literacy is required. Many of our native CDFIs are really strong in financial coaching. And so, providing those support services so that folks don't have to come back and can, start saving for down payments on house, saving for equity to help them launch their small business as well. So you can see some of their small business programs as well. They have a revolving line of credit for native small business owners, and they actually work with the state of Montana that provides an equity fund grant program that helps provide the missing equity component on some of those for some of those small business deals, and provide Indianpreneurship classes, which is a native culturally relevant entrepreneurship curriculum that understands, for example, the status of federal trust lands, and how to do some of those things in the native context and culture. So. And then I already spoke a little bit about their ag program, but they're becoming FSA guaranteed microlenders, which is really exciting. It allows them to sell their loans and continue to recapitalize their portfolio, and allows them to grow the local agricultural sectors in their economies. And as I said, super amazing new loan program that they're launching. Began in 2018. They've made 11 loans, and are I think they currently have 22 on their wait list, 22 home buyers on their wait list. So just a lot of excitement and energy around that, and a huge pipeline of folks that are excited about moving into a home. So I love this chart. This gives you some sense of the loan portfolio growth between 2014 and 2019. 2014, you can see they dispersed 46 loans for $150,000. 2019, 5 years, is that 6 years later? They're 1,500 loans for over $5 million. So, and if they're probably going to take over the world. So you might see it in ACDC Financial Service in your corner, at your local, in whatever your community is soon here. But they're really trying to reach that need for Indigenous people in Montana. And so we talked a little bit about the work that they do with artists, but they're partnering with a wonderful organization called First Peoples Fund out of Rapid City that provides a lot of training and support for Indigenous artists. And they host a variety of different events, but they do a Native Plains artist participation, and helped 8 participating artists. They've grown from 8 participating artists to 25 and over the last 4 years. So really exciting to see that work. And of course, art is such an important part of culture in the Indigenous economies that we work with. You have pottery in the Southwest, beautiful star quilts in the Midwest, all the way through beading, and there's just so much beautiful cultural heritage there that's being preserved by Native artists. All right, and then tons, of course, work around youth programs and youth entrepreneurship development. They do a 5-week class helping people create business plans, and then work with the Montana Indian Youth Small Business Program, which includes internships with local businesses. Many of our Native CDFIs do a lot of youth work, which I think is fairly unique to the Native CDFI sphere, and that is just a lot of value-based decision making. For many of our Native CDFIs, they see the youth as their future, and really are trying to invest in that space and in that work. We see youth savings programs, such as match savings programs for folks that want to save for college. You see a lot of youth entrepreneurship programs, such as what's seen here. A lot of youth financial education classes. That is, of course, a huge value. That's 7th generation thinking that you find in Native communities. And then there's their team, which I just listed off like the 3 million things that they do. It's actually not a very big team for doing all that work. So no wonder Angie's sick. I would be sick too. But you can get a sense of their team there. And I know you're going to get Angie's information too. So if you have any very specific questions about their Native CDFI, you'll be able to follow up with her. She emailed me like just a few minutes ago and was like, "I hope it's going well. I'm so sorry. You wouldn't want me to talk right now." So, but yeah, they're just one example of one of the those 70 organizations that I was talking about, the kinds of great work that they're doing in those spaces. So with that, I will turn it back to Mike and my amazing partners with Wilhemina Fund.
Thanks, Crystal. Hi, I'm Lynne Hoy. I'm the Managing Director of the Wilhemina Fund and the Head of Lending at Candide. I'm also really disappointed that you won't get to hear Angie speak today. I have had the pleasure of meeting with her at a few convenings held by OISTA, and she's an amazing ED and community leader. And also just echoing everything that Crystal said around the work that OISTA is doing. Candidly, Wilhemina just invested $2 million into OISTA to help meet the needs in Native communities. And I'll go through our impact thesis, but one of the things that we were so impressed by with OISTA is just how they build their Native CDFI networks and how intentional they are about how they lend money and how they work with their Native CDFIs over a long period of time. So I'll tell you a little bit about Candide. So some of you may have heard of Candide Group. It was founded by Anair Benamy and Morgan Simon about 7 years ago, and we're essentially an investment advisory firm that works with foundations, high net worth individuals, family offices, athletes, cultural influencers who want to put their money to work for justice. And what we mean by that is we work within private debt and private equity in terms of investing in projects that have a clear social justice mission. Over 50% of the investments that we recommend are led by women and people of color. And we have about 70 investments right now. And I want to say 70 million assets under advisory and 40 million of assets under management. So about Wilhemina, which is a $40 million fund focused on lending money to CDFIs, private funds, and direct to organizations based in Native America, the Deep South, and rural America. How we came up with the idea to launch Wilhemina, which I think is particularly relevant to the investors on the phone who might have donor advised assets. So our clients had significant assets being held at your traditional donor advised funds institutions, and they were really looking to develop a strategy to invest more in organizations that were serving community. And one of the things that we were finding at Candide is that there were a number of these amazing community development financial institutions and intermediaries like Awista that had a capital need. And so we got together with our clients and decided to create this $40 million fund specifically to put DAF assets to work in a different way. And really, if you think about the CDFI industry overall, and this is something like C-Note has been really, really good at talking about, is the assets are very safe. They tend to have low default. They tend to have preserve capital, and CDFIs need a lower interest rate in order to meet the needs of their communities. Because if you remember, a lot of people in the communities are low income people. They haven't seen the benefits of up until maybe the markets crashed today. And you haven't seen the benefits of the economic upturn that we've experienced in some of the coastal cities over the last 10 years. And I just want to name, I think is important to say, like, these are the communities that are going to be the most vulnerable when we're facing what we're facing right now with the coronavirus. And just to, if there's any grant makers on the phone, just to really be paying attention to providing general operating support to those organizations at this time, I think is super critical. But back to Wilhemina. So as I mentioned, we committed at least $10 million to invest in Native communities. And right now we are working on a strategy of investing in organizations like Awista and also directly to Native CDFIs in order to meet this huge capital need. So the portfolio right now, we have about $12 million committed out of the 40 million. We committed to lend 80%, at least 80% of the funds will go to organizations led by women and people of color. My colleague Leslie Lindo recently joined me from Common Future. So we're really working through our pipeline right now. And we specifically decided in this first round of deployment that we would be focusing on building the pipeline specifically for Native projects and Native CDFIs, as there are the organizations and communities that have the most need. Crystal mentioned her ED earlier, Crystal Cornelius, and she often talks about how Native American people are invisible in this country. So we really feel, as part of what we're doing at Wilhemina, is how do we provide the platform through our investments in our strategy to make sure that that stops being the case. Wilhemina is really rooted in restoration and repair. So the interest rate we offer to investors for a 5-year note is 1%, and for a 7-year note is 1.5%. And that's really to acknowledge that all stakeholders need to benefit from investment in communities, not just the capital holders or the owners of those organizations. So our impact thesis, representation matters. We heard it over and over again. And what we mean by that is the organizations have to be led by and have staff and board teams that have similar lived experiences to the communities serve. And as you heard Crystal talk there, there's no place that is truer than within the Native communities, which is, I think, part of the reason why they have had so much success, such low default rates, and have been able to grow at a sustainable rate. As you heard Crystal speak about as well, that Awista and the Native CDFIs are a good example of, is creating products and services that actually are relevant to the communities they're serving. So you just saw the list that NACDC, the products they've created, but they've been creating that for a huge state where there might be different needs all over that state, but they're able to create those products and services that will serve the people in the way that they should be serving them. And then access to capital, or expanding that. As Crystal mentioned, and there's so much data to support, there is a lack of capital access in Native country. And it's not because these loans are risky, although the perception based upon years of rhetoric would be that they are riskier loans because of they're on sovereign land, which is just frankly not true, but that's created an absolute lack of capital. So part of Wilhemina's intention is to flow capital to those places that aren't getting it. And then when we talk about building community wealth, small business creation, owning a home, access to knowledge, technical assistance that provides knowledge on financial literacy. That's all part of building community wealth and community sustainability over time. That certain CDFIs, and particularly CDFIs in Native communities, do an amazing job of doing. So as I probably have mentioned throughout this, but want to be super clear, we prioritize Native communities because there's been a systemic failure by the financial markets to invest in these communities. If you looked at the default rates, if you looked at the net asset ratios for these and the repayment rates for these Native CDFIs, people would look at them like they were cash CDs. There's that low risk of investing in them, and yet the capital still isn't flowing. So we see that at Wilhemina as a market failure that we're determined to correct. One of the interesting statistics that we found, particularly when it pertains to philanthropy, is that philanthropic dollars to Native communities have actually been declining. And when they are flowing, they're being flowed through white-led intermediaries. So when this happens, it breaks down the infrastructure within those communities to support themselves and to be self-sustaining. So that's why it's super important for us to be lending money to organizations that are led by Native people. The share of the funding that is received, and this is philanthropic funding, is significantly lower than the population size that these communities make up. So, that's part of the lack of access to capital that I was talking about earlier. And as Crystal shared, the projects that Native communities are investing in and the CDFIs are investing in really center all stakeholders and not just the capital provider. And, if you look at the paradigm between Western culture and Indigenous culture is very much about centering community and consensus. So part of the reason that we've been really excited to prioritize these communities, because we believe at Candide, when communities have the resources they need, they can thrive. They know what to do with it. They're the ones who are living with these issues every single day. So the only other thing I want to add there is one of the things that we heard when we were talking to various Native CDFIs and other partners is oftentimes foundations, when our approach for funding, will say they don't have a Native focus. So part of what we're trying to do is to encourage people to look at why they don't have a Native focus, especially just understanding the racism and the history of this country, and how we as partners can all come together to acknowledge that every foundation and investment strategy should have a strategy around investing in Native people. So I will pause there and hand it back over to Mike. If anyone wants to hear more offline about why we decided to invest in Awista, or just learn more about the fund, focusing on these communities, I'd be more than happy to discuss it. Thank you.
Yeah, so thanks for highlighting those issues, Lynne, especially about the relative low risk of CDFIs, and then especially that, as we face a crisis, I think some of these communities may be struck harder than us on the coastal cities with relative wealth. And thanks to Crystal for kind of carrying the load here and doing a fantastic job filling in for Angie. And again, we send our best to Angie. So I'm going to leave it for a few minutes to see if we get any questions. And I'm happy to ask some questions too, just to bother Lynne and Crystal if they're up for the challenge. I would say, Crystal, one question I have for you is, what is the type of work, or what's the biggest need from the CDFIs that you work with, or what's one of the biggest challenges that you see on a weekly or monthly basis?
Yeah. Well, there are quite a few. Some of the challenges, of course, we see is that it can be very difficult to translate a lot of the work that our CDFIs do in their model to the modern context. So of course we talked about, Lynne did a really nice job talking a little bit about further talking about the capital access issues. We did a report in 2018 where we interviewed a bunch of investors about why they weren't investing in Native communities, and heard back a lot of concerns about perceived riskiness and those sorts of things. So those capital access issues are very difficult, and then trying to translate that business model to say, just how very community-based that work is. Why isn't your loan fund fully self-sufficient? Well, it's because we're providing all these support services and training and technical assistance and all these different kinds of things. So there can be some difficulty kind of like translating some of what the model itself and those sorts of things. I would also just say, one of the other challenges, of course, is just operating funds. And I think I love how Lynne addressed that. One of the things, and I think this is just an issue that nonprofits have in general, right? So let's just acknowledge that. But it's very, when we work with our funders and our partners, we have a tendency to have to kind of promise the world as far as, here are the 85 deliverables, we're going to do with $2,000, and here's the new program we're going to launch. And it can be very difficult to find, just the operating funds that support kind of the good centralized work that we do on a day-to-day basis. And that's an issue that our native CDFIs have. And we're lucky to have the CDFI fund, but that is not where we want to stop, right? We want to be entrepreneurial organizations that are mission-based and that bring in new partners into Indian country. And we are oftentimes, out of people's footprints. So with a lot of foundations, of course, that can be a challenge because not only are we not, the Indigenous issues are maybe not on the radar of some of our larger national foundations and partners that could be potential partners, but when you have a regional foundation or a community-based foundation, we're working in places that are pretty marginalized and oftentimes don't have access to a lot of those resources. So there's a lot of challenges, but I will say there's also a lot of creativity in solving those issues. So we have really, really, really amazing people that are using partnerships really creatively. So keeping the cost of that training and technical assistance dollars low by partnering with the local, by inviting the small business development center that's 100 miles away to come, and we'll set up appointments for you, and we can think about how to creatively bring in new partnerships to create operating efficiencies. And there's also a lot of sharing that happens in the native CDFI sector. So when one product is very successful, meeting the needs of a native CDFI, people are, oftentimes they'll be piloting and then they'll share their loan policies in a very just open-hearted, generous way. But that is just common to our sector and to the work that we do. And so there's also a lot of creativity in the face of some of those challenges.
Great. Yeah, it looks like we have one question that came in from Dolores. I'm not sure exactly who this is for, but she asked, what type of stress testing have you done on your loan portfolios? So I'm not going to venture to answer that for NACDC since Angie's not here, but I know CDFIs are very careful financial stewards as far as origination and really being values aligned too. So they have the flexibility to do things that maybe a traditional financial institution can't do, such as kind of extending the life of a loan or holding things in advance to build around events like we're seeing today, where a small business may not be able to meet payroll because no one's shopping at their store. So I'm not going to answer that for NACDC. As it relates to C-Note, that's a little bit above my financial expertise, but Yulia, our COO, used to manage risk for a $7 billion fund, and I know she takes that very seriously and does modeling. I think she also tries to address a lot of the financial risk on the due diligence side, and that's kind of been an area of expertise for C-Note, which is building out processes to streamline, speed, and improve the diligence process of CDFIs. And then, Lynne, I don't want to speak for Candide, but maybe do you have any comments on that front?
On the stress testing for the loan portfolios, yeah, we try and follow standard procedures that are available from industry, particularly from the CDFI space. And the community development credit union space. So I would say that on the stress testing piece, we did a lot of research up front about what our loan loss reserve should be, for example, and then we get a lot of data externally, whether it's from the FDIC about how we stress test that portfolio. So, you know, sadly for what we're seeing today, this kind of seems like a black swan perfect storm event that is kind of hard to determine, but oftentimes we will look at the see how these organizations perform back at the financial recession, and then use that in particular as a basis for stress testing, and then add in whatever additional criteria is specific for that geography. One of the things, because we do look at risk differently, and we understand that the best practices of banking have been put in place to be exclusionary, and we will look to see, understand what the community capabilities are in rallying around these organizations. A really interesting statistic that I learned at the California Tribal Program convening here in California was small businesses on tribal lands actually perform better than small businesses on non-tribal lands during the financial crisis, which everybody in the room was surprised about, frankly, you know. But I think that those are these data points that's really important when you're thinking about doing any stress testing or risk assessment, is how communities rally around their infrastructure is very, very different in Indigenous communities than it is in the rest of the U.S.
Yeah.
Preach, Lynn. I mean, Lynn speaks my heart and mind, in that she was, you know, this. Our native CDFIs actually did very well in the recession, right? Because they're working in recessive economies already. But you know, we at Awista, you know, we're pretty thoughtful underwriters, and as witnessed by our delinquency and write-off rates. But as we think kind of our native CDFIs do think about portfolio concentration in a thoughtful way. There are just some sort of regional-based concentration that's difficult. So, for example, we've got a lot of folks in the Pacific Northwest. A lot of the entrepreneurs, of course, are fishermen, right? That are working, and that's been their livelihood for generations, 10,000 years, right? And they've been fishermen. And so, you can have portfolios that can be overly concentrated in certain things like that. So there's a lot of thoughtfulness, and we do a lot of technical assistance about being thoughtful around concentration risk in those ways, in those spaces, around some of those regional and kinds of issues that might pop up in the portfolio. We were one of the issues that we hadn't thought a lot about and were surprised and had to think a lot about as an organization is when the government shutdown happened. So in Native communities, there's you oftentimes have very high unemployment, but one of the few employers in the community is the federal government. So that's the Bureau of Indian Affairs, that's Indian Health Services, those sorts of things. So when the government shut down, there were higher delinquencies among our native CDFIs. And so we had to think really creatively around that, and have been trying to think about ways we can help our native CDFIs build cash reserves and different kinds of things like that in case, similar sorts of things would happen here. So those are just kinds of more generally the ways we think about that, and I'm happy to kind of further. But I can only speak a little bit about our portfolio and kind of the thoughtfulness that which we have tried to build in risk mitigation into our own portfolio, which includes, we did a capital pool that was $10 million, of which we fundraised for a loan loss reserve of $1 million. Cash. So we try to think really creatively around risk mitigation strategies ourselves, in light of knowing that there are going to be stressors, and that that's just the reality of the kinds of work that we do. And we want to look into the eye of the storm with risk, but be prepared and thoughtful.
Great. Yeah, I agree. Nat had asked, would we be able to access the presentation? So you should be able to download the slides as a viewer. Here are our email addresses. So feel free to email me, mike@mycnote.com, if you want the slides and for some reason couldn't download them through this platform. Also, obviously all of us are available to reach out if you have follow-on questions. Nat, I think you wanted to see some data from NACDC. I'm sure Angie, once she's healthy, and again, we send our best to Angie. I hope she feels well soon. Angie will be able to connect with you on that as well. I really want to thank Lynne and especially Crystal for presenting and really carrying us through this today. Thank you so much. Thank you all for attending today. Really grateful for your time. And I just wish everyone safety and good health. And I'll talk to you soon. Thank you so much. I'm going to wrap it up now. All right. Bye.